Hello guys and welcome, it's Travis from Rebirth Holdings and we're bringing you another weekly technical analysis. Now unfortunately didn't get a video from ourselves from last week. I apologise, I take full responsibility of that. I've moved house guys. So I've been in and around, driving vans, putting up flat pack furniture. It's been a crazy week. So literally I've been able to get the laptop out, analyse a few charts, everything settled down, me and the missus are settled in. It's time to take the charts a bit more seriously. So now, once again, just before we get started, always want to bring you towards our website. Any information you want to know about us, it's all on our website, rebirthholdings.co.uk. And of course, most importantly, how to trade Forex. If you are ready, please visit our website. By all means, we can get started. There is group courses, one-to-one courses, and obviously online courses as well. Now, guys, let's get straight into some technicals. So we're talking about the Aussie dollar against the Japanese yen. I'm going to bring two charts to you today. But if some of you guys know me, some of you guys are aware, I don't usually tend to trade the Aussie dollar. Sorry, the Australian dollar. Now, I've been able to pick up a few more currency pairs in my watch list. But then I've also been able to drop a few currency pairs. So at the minute, I'm not looking at the pound pairs at the minute. Reason being is I've just seen them in a massive bear market, simply due to fundamentals over the past 6 months playing a big impact on the pound. Brexit, prime minister issues, etc. As I said, it is in a bear market as we speak. But hopefully, once things stable out, technicals can take full control again. From my opinion, that is, hopefully we can catch that bull run once things want to slow and calm down. But literally, with no further ado, Aussie against the Japanese yen. As you can see, I'm on the daily time frame right now, and just from those two daily trend lines, we can see that we are in the downwards channel. Now, I'm going to throw quite a few technical analysis, obviously, chapters at you guys to kind of get you guys thinking, technical analysis and reasons for how things, obviously, naturally, you put two and 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 two together, you get a bias, obviously, in going long or short. Now, looking at this chart in particular, you can see that we had that massive swing and making a swing go to the downside on the week, obviously on a daily time frame, and we had the consolidation over 4, 5, 6 days, and then you kind of had that pull back up over the past couple of weeks. Now, as you can see, I've had a monthly support that's held fantastically, as well as the daily trend line, holding the price from perhaps going underneath that 74,400. If I go to the weekly time frame, you'll see more significantly. Amazing. This trend at this monthly key level plays a big part where price tends to reject it quite nicely, and that's what we've had over the past couple of weeks. Now, as well as that monthly support and that daily trend line support, we can also start to see things that are more evident on the actual chart, the blank chart. So I've also got the moving averages here as well, guys, and I've had a moving average crossover on the 3rd of July. So this week, actually. So that was a big indication to me of perhaps coming out of this long trend here. We may have some consolidation in this area, as you can see here, but naturally to myself, with the moving average crossover, and we had that beautiful bullish engulfing hammer candle form on the same day, it kind of gives me indication as to perhaps we may start to see a push to the upside. Obviously, as you can see, price was sitting underneath the moving averages. Through the consolidation, we was riding above it. But then, as you can see, we've started to ride above it again. So that's where perhaps from just looking at moving averages, price candles with the hammer, as well as obviously rejection of the monthly support, we could see perhaps a potential long on this pair. We've also been discussing this in our WhatsApp group. A couple of traders have already been looking at this from when we had that monthly support and traded it long from there. But as you can see, we're caught up in about 6 days worth of consolidation as we speak. Another thing that I wanted to shout out to you guys on this pair as well is perhaps the daily key level. So this little zone here, I see this as a supply zone. So literally a case where if we was to see price get sucked an injection of volatility back into this zone, we may see another push into it. I do see that as a springboard back up to the upside. But as you can see, we've had the breakout of it. We've had the retest of the same support level on a daily time frame, which could also spring back to the upside. There is one thing I want to add to this chart. I'm going to do it on the 8-hour time frame. Bear with me, guys. Cool. Let's go back to the daily. I've added in a lower time frame trend line. So as you can see, little trend line there. You could say that we broke out of it. We've had that shooting star that retested this trend line, and then we've had that hammer that looks like it's a springboarding off that break, retest, continuation, which could also be another indication. One more thing that perhaps we could look at, well, there's multiple things we could look at, guys, is naturally we could perhaps throw Fibonacci retracement on this currency pair as well. So if we have a look at to see from the lowest low to the most recent swing high, okay, see if any pull back into Fibonacci zones. As you can see, let me just zoom in for you guys. Where that hammer had that pull back down, it tested the moving averages. It also tested the 50% Fibonacci, but the consolidation is and around the 38.2% Fibonacci retracement zone. As you can see, if we have a 38 fib extension retracement, the extension tends to be towards D2, which is our minus 61% target zone. So that, as you can see, guys, also matches up with a daily key level that I would be expecting to see the price be reaching up here. As you can see, it would then act as a nice ceiling in comparison to in the start of the year, acting as a nice floor, as a resistance, and it could be a potential barrier of support as a target zone as well, guys. So that's another confluence that we could perhaps throw in the mix. One last thing I want to also mention to you guys is, if you guys know your technical charting patterns, what may you be able to see? So from what I can see straight away is perhaps the inverse head and shoulders. So let me just point that out to you. There's a left shoulder, there's a head. Potentially we've had a right shoulder here in that hammer. Apologies, guys. Boom, inverse head and shoulders. For me personally, I still think we may be able to test and stop hunt. So when I say stop hunt, the big players in the game may know that so many people have got so many confluences for it to go long. They may be able to push price back down, test people's mentalities before shooting back up. So we could perhaps have the right shoulder already being formed, but with the dojis, we might have it being tested again. But for me, I can start to see it inverse head and shoulders being formed as a target zone, guys. Copy and paste this. This gives you a potential target zone for duplicate that from where we've just done it. And if I was to add a neckline to this bad boy as well across the consolidation zone, if we see a breakout of this neckline, so price start to go above here, copy and paste the target, it also matches up with that daily key level we had there. So naturally, the price of 77,500, guys, is a great target level for this currency pair. By all means, as I said, we are consolidating within this range at the moment. So I would hold tight. I'd wait to see a break above or break below before we have any decisions. Right, moving on to EURCHF. Again, guys, this is a new one that I've added to my watch list as well. So I wanted to kind of give you guys a long-term perspective on this analysis. Well, a bit of both, so a bit of long-term analysis and obviously intraday sort of projection on this pair as well. So as you can see, I've kind of got some dynamic trend lines put in. So going back to 2015 from my last swing low after the economic crash, or some sort of economic crash. I think this could have been, I'm not too sure what that is, but that was a massive drop, as you can see there, from 120 down to 0.98. But I've used that as a first point, second point up here, extended it off, and I've also done another trend line from the first point here, second point there, and extended it off. Now, as you can see, as I've extended it off from getting my point A and my point B, it's then kind of, price is then kind of played in between the two trend lines. So from the first trend line that we drew here, it's this one here, you could perhaps see that price was bouncing off it. We had a break and then we had a retest, and then price has been falling ever since. Now, as you can see, price has been falling ever since this year. And now we've reached the second trend line. Now we had a break of it. As you can see, we had a doji just closing underneath. And then we tried to have a retest this week with a bullish week closure. But as you can see, on the outside of my trend line. Now, what's my thoughts on this? So naturally, people could class that as a morning star. For me, I'm personally not calling it a morning star. Reason being is this bullish candle hasn't closed in the top 40% of the first bearish candle. So for me, I still see this pair in a bearish market. Now, looking from this higher time frame analysis, as you can see, we follow the trend of breaking a key level, retesting it and going back down. Again, I still think that we could break this key level as we have retested it, and then we could perhaps see some decline to perhaps another resistance, i.e. this next turquoise line as a weekly resistance. So let me step down to a daily time frame, guys, just to show you what my thoughts are on this pair, and to perhaps see that retest a little bit clearer on a daily analysis. But what you can see here, guys, is perhaps I've also put in a daily key level trend line across the top, and we've kind of had that one swing, kind of had that pullback here. We've had a second swing here, perhaps had some consolidation and a bit of a pullback here. I am looking for that final leg to the downside. Now, as it's all about what the price wants to do along this weekly resistance. If we want to start closing above here and perhaps closing above my monthly resistance, we could perhaps see 112,700 being met again. But if price does hold its strength, so hold its price, and we get the sellers coming to the market, I can see this price breaking 110 or hitting 110 at first and perhaps continuing lower. But as you can see, we are consolidating. The reason what makes me know that we're consolidating a bit more on obviously a shorter time frame is this big ass daily mother candle. So as you know, rules of a mother candle, you want to see price either close above the mother candle or close below the mother candle. Now, this is one to keep your eye on, guys. As I said, we are consolidating, but it's a great opportunity to perhaps get in a trade on this one. So as I said, currently it could go either way, but I'm swaying more to a bearish momentum. I am looking for that leg to the downside. Let me see if I can perhaps put a Fibonacci in from the last swing to the last swing high to the most recent swing low. See if we are playing in any Fibonacci fields. Bear with me. So we're playing in around the 50 and the 38 Fibonacci. We've had a moving average crossover on an 8-hour time frame. As you can see, you could perhaps see targets of 110 and 109.32 if you're looking at Fibonacci extension levels, which actually matches up with a monthly key level, as you can see there. So these are things that I'm perhaps looking at. This one is perhaps a long-term perspective, but ultimately I have got my eye on these two pairs this week. By all means, guys, that's it for myself this week. Any sort of contact that you want from myself or Nathan, hit us up on the social medias, hit us up on tradingview.com, hit us up on YouTube, Instagram. You know where to find us. Stay pipping.